I'm Jeff Lamb, President of Wealth Distribution Strategies. I hope you're all enjoying a wonderful 2024 and the nice warm weather that's starting to approach. I'd like to give you an update on where the markets finished in 2023 and give you some things to think about as we go through the 2024 calendar year. But before we jump into some of our favorite charts, I just want to remind you that this is provided for informational purposes only and should not be construed as investment advice. References to specific portfolios should not be considered a recommendation. Data and analysis does not represent the expected future performance of any investment product or strategy. Investments involve risks, which means the possibility of losing principal. Let's dive into our first chart. This is actually a follow-up from our last video. This is an updated version from January 31st, 2024 of the federal funds interest rate. In March of 2022, the Federal Reserve started an aggressive rate hiking cycle in an effort to bring inflation down. Last year in the fourth quarter, the Fed signaled that they are done raising interest rates and that they expect to start to be able to cut interest rates in 2024. Based on their forecast from December of 2023, you can see based on the blue diamonds on the right of this chart that they are looking to cut the rates possibly 3 times this year, 4 next year, and 3 the following year as they look to get back to their long-term target of 2.5%. This caused both stock and bond market to rally nicely at the end of the fourth quarter and so far into 2024, as both the S&P, the Dow, and the NASDAQ have all notched all-time highs. In 2023, U.S. stocks finished up 26.3%. That is the 37th time that we have seen a calendar year greater than a 20% return in the past 98 calendar years. Over that 98-year time period, U.S. stocks have averaged a little over 10% per year. But what is kind of strange is that it's very rare that we actually see a return close to that average return. You can see that that has only occurred 6 times where we've seen a return between 8 and 12% in any calendar year over the past 98. While stocks finished the year great in 2023, bonds ended up with a pretty average return. In 2023, U.S. bonds were better than average. They notched a 5.5% return where the average is about 5%. So while stocks, we very rarely see returns near the average, bonds, you can see 29 out of 98 years, they've been within 2% of that 5% average. 2023 was a solid year for bonds after struggling most of the year. Realize in 2022, we had the worst calendar year ever in the bond market, down over 13%, which followed a 2022 year where bonds also lost 1.5%. With the Fed raising interest rates, cash accounts have started to become more attractive over the last year, year and a half, as we've seen very little return on money markets and CDs over the past 10 to 15 years up until the last 18 months. As the Fed starts to lower interest rates, if we look at some time periods since the mid-90s where the Fed lowers interest rates, we tend to see bonds perform very well and outperform money market accounts. So while those yields on CDs, money markets, savings accounts are much more attractive than what they have been, it is likely that with the Fed cutting interest rates, we'll start to see those yields fall. And therefore, this could make an attractive opportunity in many areas of the bond market if you're willing to accept the additional risk. As you see, the average of these 4 different time periods previously from the mid-90s through present time, we've seen U.S. core bonds average over 8%, short-term bonds average over 5%, while money markets average just 3.8% when you look at the 12-month time period following 6 months from the last Fed rate hike. Let's take a look at some of the economic landscape and how that changed from the end of 2022 to 2023. We saw the Fed raise interest rates from 4.5% up to 5.5%, and that's where markets are excited about the possibility of them lowering that interest rate down. Now, they did that primarily to fight inflation, and we can see that at the end of 2022, the CPI number was at 6.4%, where now it's fallen to 3.4% at the end of 2023. We've seen the unemployment rate little change, as now we're at 3.7% instead of 3.5% at the end of 2022. So from a macro backdrop, we're seeing declining inflation. We're seeing some geopolitical uncertainty. But last year, we saw a big focus on tech, especially in the AI space. Our belief is having a diversified portfolio works very well, although at times it doesn't feel so great. So this is a very interesting chart looking at some different time periods in the markets since 2000. So a portfolio that's diversified, and it shows you above the mix between large cap stocks, mid caps, international bonds. It gives you an idea of, for example, 2000 to 2002, the S&P 500 lost over 40%, while this diversified portfolio was down over 15%. And so people weren't happy to lose money, even though it performed much better than what the S&P 500 did. Look at another environment from 2009 to 2019. The S&P 500 was up over 350%, while this diversified portfolio would have only been up 237%. So oftentimes people are upset because they didn't make as much money when the S&P 500 is up because they may not be taking as much risk. What's interesting is with this chart, which goes back to September of 2000 through the end of 2023, the diversified portfolio generated basically the same results as being 100% invested in the S&P 500 without the big peaks and valleys that occurred by investing in the S&P. So while a diversified portfolio doesn't seem like it's working, oftentimes over long periods of time, it can deliver very solid results. Now, I'd like to introduce a new member to the WDS team. We're excited to have Manjula, our new lead financial strategist, join us in January, and he'll be an integral part of the research that we do with our portfolios and also the work that we're doing with our clients. So I'd like to turn it over to Manjula so he can introduce himself and give you a little bit of a background.
Hi, my name is Manjula Hettiarchi. For those of you who are wondering, with that kind of a last name, I wonder where he's from. I'm originally from Sri Lanka. Came here way back in 1990 to go to college. Went to the University of Wisconsin in La Crosse for my undergraduate degree in finance. After that, I went straight for my MBA in finance to Northeastern University in Boston, Massachusetts. And after my MBA, when I was looking around to start my career, Boston just seemed to be a little bit too impersonal, a little bit too large. So I decided to come back to Wisconsin to the friendly confines of Madison. And I've been living and working here in Madison ever since then, since 1996. So I'm going on my 28th year in my investment career. And during that time, I've also earned my CFP designation, Certified Financial Planner designation. And I've also earned, about 10 years ago, I earned my CFA charter. And over the 28 years in the investment industry, I've worked in smaller, RIAs, advisory firms such as WDS. I've also worked in larger organizations such as US Bank and BMO Harris Private Bank. And just recently, before joining WDS, I worked for an affiliate advisor at Northwestern Mutual. And the great thing I feel personally about my career is that along the way, I've gained some knowledge, most of the different areas of investments and wealth management in general. So I have some knowledge in financial planning. I've gained some knowledge in tax planning. My core strength, of course, is investment management. But I have some knowledge in many areas, and I hope to utilize all that knowledge and experience to help you. I live here in Verona with my wife and 10-year-old son. In fact, I live just 5 minutes away from WDS. I enjoy listening to choral music during my downtime. That's one of my biggest passions. I sing in the choir at St. Andrew's Episcopal Church by Camp Randall. I also enjoy reading poetry during my downtime. Not things that you usually hear from people as to their main interest, but that's me. I look forward to helping you. I look forward to collaborating with the advisors here to help them help you better. Please reach out to me directly or through your advisor with any questions that you might have, financial planning or tax questions, investment questions, economic questions, it doesn't matter. I'm here to help you. So I look forward to helping you, meeting you, hopefully in person, and talking to you in the near future. Thank you.
Thanks, Manjula. We're excited to have you on the team. Lastly, before we wrap up, I just want to get you up to speed on our events that we have happening here this spring. Our next event is our basketball tournament challenge. This is a multiple choice questionnaire that you fill out about the men's and women's basketball tournaments. You don't have to have any knowledge of basketball whatsoever to compete in this contest. In fact, I'd probably argue that you have a better chance of winning with the less knowledge that you have about the current NCAA teams. The way this works is on Tuesday, March 19th, you'll get an email with the questionnaire asking you to pick, for example, your favorite 1 seed in the men's tournament, your favorite 5 seed in the women's tournament. Who do you think is going to score the most points for the Badgers in the tournament? Which Big Ten school will have the most wins between the men's and women's tournament? It's just a multiple choice questionnaire, but this is designed as a family event. We will give prizes to the top 3 individual entries, but in addition, a family entry, the top 3 family teams will also win. A family entry is 3 individual entries combined together by having a family team name. Be on the lookout for this. You'll have a short period of time to fill out your questionnaire as we need those responses before the first games start on Thursday, March 21st. Our next event is our biggest event of the year, and it's our Trivia Night for Charity on Friday, April 19th. This year, we're raising money for Gilda's Club. Gilda's Club is a cancer support organization here locally. Last year, we raised over $45,000 for days. This year, we've set our goal of $50,000. The staff, the advisors, and WDS as a company has decided to match up to $15,000 of client donations. Entry fees are $40 per person, or $400 for a team up to 10 people. Now, don't worry, you don't have to be good at trivia at all, as this is a charity event, so we sell game advantages, or what I like to call cheats, to help you improve your trivia score throughout the evening. We hope you'll join us. Be on the lookout for information on how to register for that. On Thursday, May 9th, we will have our Medicare event, which is a Medicare 101 by Medicare specialist Ben Rothering with WDS Health. If you're approaching Medicare age, this is a great event to get the basics of Medicare. Check out our website at wdstrategies.com to get other updates about the other events that we'll have throughout the year. We hope you enjoy the wonderful spring weather, and we look forward to seeing you soon.